NiftyTax.com is a concept for tax reform that allows individuals to opt out of Social Security retirement but still retain the aid-dependent children and disability insurance, and they would put their FICA tax that they normally pay into a special tax-eliminating retirement account. These special tax-eliminating retirement accounts will pay interest-only payments during retirement. The principal and interest accumulated over the 45-year period is never spent. It is left in the account until the death of both husband and wife, and then the balance in those accounts are willed to the state instead of paying income taxes every year. Husband and wife would have an account of equal value even if the wife stayed home to take care of the children. To test out this concept for tax reform, we need to go back 45 years to the year 1967, where the minimum wage was $1.40 an hour. We then go forward to 2011, when the minimum wage is $7.25 an hour. Retirement account total principal and interest over that 45-year period is $387,155. The amount of monthly interest-only retirement income in 2012 is $1,091 per month. The calculated Social Security for that same income is only $944. So the retirement savings account produces about $346 more income than Social Security. This individual never made more than minimum wage during the 45-year period, but his income increased 517% over that period. We're going to take note of this percentage and use it later on. Let's now take a look at a person making the median household income for that same 45-year period. In this example, we have a person making $6,156 a year, and then 45 years later, he's making the median household income in 2011 of $49,123. The total amount in his retirement account is $928,884, and he has a monthly interest-only retirement income of $3,096 per month, compared to the calculated Social Security of $1,961 per month. This retirement account is producing about $1,100 a month increase in pay over Social Security. Also, during that 45-year period, he has increased his income by almost 800%. Let's look at a more realistic example, still going back 45 years, but this time we're going to start out making $1.40 an hour minimum wage, and it increases to the median household income in 2011 of $49,123 per year. Our account total now is $884,163. The interest-only monthly retirement income is $2,947, and Social Security is computed at only $1,739 a month, a difference in our account of more than $1,200 per month. These last three examples all used historical data going back 45 years. The FICA tax that was collected and would normally have gone to Social Security, and the annualized return on the S&P 500. Now let's take what we've learned from the last three examples and project it forward for 45 years and see what our retirement account total principal and interest will be worth in the year 2057, starting out with a minimum wage of $7.25 an hour for the year 2012, and increasing that by 500% so that in the year 2056 we're making $75,400 a year. Retirement account total principal and interest has accumulated over that 45-year period $918,201, and our interest-only monthly retirement income is $3,061. The other increase in pay that we saw in the prior examples is an 800% increase over 45 years. If we increase it to that amount, our retirement account total principal and interest is $1,256,872, and we have a monthly income of $4,196 per month. If you want to see what happens if you use the annualized return on the S&P 500 for the past 45 years in our computations for the next 45 years, we would get a retirement account total, principal and interest, of $3.6 million and a retirement payment of $12,000 per month. Will the minimum wage increase for the next 45 years by 500%? Will the median household income increase by 800%? And will the S&P 500 perform like it did for the last 45 years? If the answer to these three questions is yes, then the amount of money produced by the year 2076 will be greater than $6 trillion per year. Please visit niftytax.com and see how the 787 flat tax plan and these retirement accounts can eliminate all taxes based on income and allow individuals to save for retirement and spend the rest of their money on their family.